All right, traders, we have some very important updates to go over on the stock market. A lot of big companies just released earnings, and a lot of them, including Google, really trended up along with AMD. And if you noticed, the stock market followed towards after hours. Now, with that being said, this is going to give you an in-depth price action analysis on how long this micro bull run is going to last. It's going to give you a better understanding as traders and as swing traders and as macro traders on really when is it time to lock in profits if you've been going long, right? And when is it time to add to put options or to buy some put options for a swing. This is going to give you a better understanding on when the next bull trap is going to be created. I'm going to show you what confirmations I'll be using moving forward to, get in on this next bull trap situation. So with that being said, we're also going to go over some key stocks. Some of the stocks we're going to be talking about is going to be Tesla, BBBY, Lucid, Netflix, Macy's, Apple, Robinhood, Coca-Cola, AMC, Shop. There's quite a few stocks that we're going to be going over, so make sure you stay to the end. This video is going to give you a much better understanding on the price action analysis and how to understand when to be bullish and when to be bearish, and most importantly, how to tell when a micro bull run, when a micro bear trap is about to end, and then when those, one of the bulls going to get trapped, and then when is it going to be the right time to buy and add to puts. That's what this video is really going to walk you through. So let's get into that, right? So a lot of you guys have been, asking me, when are you planning to add to puts? When are you planning to buy puts for kind of like the macro swing trade in that sense, right? Because I recently got, I recently took one of my worst trades, definitely my worst trade throughout the past 2 years. And, I've been very, very patient, kind of just waiting for the right opportunity to really come back strong and make up for that. And with that being said, one of the key levels that I was looking at in terms of price, where can the next bull trap be created? And what I was looking at on the SPY here was I was noticing there's some key support at 450, and then there's more key support. This is a very strong candle bottom wick at 456.60, right? So somewhere in between that range is where the next bull trap can be created. And why do I think that is? Well, SPY had a massive pullback recently, and once it cracked 450s, it dropped all the way to 420s. Now it's ripping back up, and we're going to wait for a confirmation to see if that previous support can turn into resistance. But it's not just based off of price, because, if 455 is still bullish and daily candles are forming, then the next level we're going to be looking for is towards 470, right? Towards resistance, not the key breakdown support levels. You guys know recently bears got trapped towards the key breakdown. Now, with that being said, how can you kind of figure out what confirmations do you want to use to confirm that this micro bull run is going to be over, that this micro bear trap is going to be over, and then the bulls are going to get trapped, and then you pick up the puts, right? What confirmations do you want to use? I'm going to show you 2 ways on how you can kind of confirm, and how I've confirmed this in the past and made a killing, consistently buying puts when SPY was in the 470 range. So I'm going to show you what confirmations that I'm looking for in terms of to really add, in terms of to really go heavy on a macro put, into the SPY here. So as of now, for the micro price action, it's just nothing but strong bullish green candles on the daily, right? And it's closing extremely strong, right? It's kind of doing something like this, where it's just consistently going up. It's consistently closing strong. So what are the 2 confirmations that I'm looking for to figure out when this micro bear trap is going to end, when the bull trap is going to get started again, and, for the green light to, buy puts? So 2 things. I'm waiting for some bearish candles. I'm looking for some red bearish candlesticks, something like this. This is what I'm looking for, some red bearish candlesticks, right, on the daily chart. So those will begin to form, and you'll begin to know, where it's going to close at towards the end of the day, which is around 3:30 p.m. That's where swing trades are going to be made. So I'm looking for simple confirmations. Red bearish candlesticks on the daily towards key levels. What is the current key level I'm looking at? Right here at $456. If it goes above that, then the next key level that I'm going to be looking at is going to be 470. Now, what is the second confirmation? And in my opinion, this is a lot safer way to do it. What's the second confirmation I would look for? What's another confirmation? I would wait for a price channel to develop at a key level. So a key level is 456. Another key level is 470. What would the price channel look like? What would I be looking for? Study the price channels on when SPY was just sitting towards resistance, sitting towards a key level. It failed to break out and then it just got crushed, right? So right here, SPY is just sitting. See how it's sitting, forming red candles? Then it drops. See how it's just sitting towards that resistance, not doing much, forms red candles, then it drops even more. See how SPY is just sitting, forms some red candles, then it drops, forms another red candle, then it drops, right? See how SPY is just sitting, it's forming this little micro price channel towards a key level, then the red candles come in and it drops even more, right? So those are the two confirmations. This is very, very simple stuff, guys, and that's what I'm waiting for, and I'm planning to kill it once again, like I typically do with the SPY. I explain to you my mistakes that I made in terms of that swing. You don't want to swing trade a put option into a green bullish candlestick, whether it's at resistance or support, but especially in a situation like this where, typically every year the market has a 7 to 10% pullback and then it recovers fairly quickly. There are those once in a lifetime opportunities where the market drops 20 to 30% the same month. And that's kind of what I was hoping for, in a sense where it can at least drop 15 to 20%, but that did not occur. So with that being said, in terms of, swing trading put options, you need to wait for the bearish confirmations. And that's what I'm doing. That's why I'm being very, very patient. I'm not looking to trade that much. And also, don't try to fight the micro trend. If you're going to do it, like, your best case scenario is like a long-term trade. But if you're day trading or you're doing short-term swing trades, don't try to fight the micro trend. For those of you who keep trying to buy puts, like you guys, like, we've been killing it on the puts, right, for nearly a month straight, and then the trend flipped. You got to adapt. So don't keep trying to fight this whole micro trend. Respect that. The market typically pulls back like 7 to 10% once a year. And this right now is one of those situations where there's no signs of it stopping. Plus, you have all these strong earnings reports. Like Google. Google was a big winner today on the earnings. This hit nearly, wow, it hit $3,000 in after hours. That's absolutely insane. So that's going to help push the market, right? So a lot of these earning plays really push the market here into this little after hours move up. But with that being said, guys, just wait for the confirmations. And in terms of right now, look for key levels and just look for, the best trades at the best setups. Right now, I'm not really seeing any amazing setups at the moment, so I'm mostly just on the sidelines. We're going to be discussing these potential setups and what I'm going to be looking for. But what I want you to understand is, in terms of moving forward with puts and adding and getting in on another macro trade to, recoup for this loss, for this big mistake that I made, I'm going to be waiting, like I said, for the bearish candle confirmation or some sort of price channel to develop. And I'm in no rush to get in just yet, right? This could be something like this. 1, 2, 3, this can have 2 more big green days, and then it just kind of sits in a channel. So we got to wait for some confirmations. And in terms of the squeeze indicator, like I showed you guys in 2020, things flipped for 2020 as soon as this went from red to yellow. The market bottomed out and it continued to go higher. And then once it went teal blue, it spiked even higher. And then dark blue is when it started to pull back and crash. And you could see right here, same case scenario. SPY bottoms out. Once the yellow comes in, it rips up. The teal blue causes the spike, and then the dark blue causes it to sell off hard. Now the same thing's happening. The yellow bars come in, it's ripping up. So we're gonna want to wait for some dark blue to come in that sense as well. But that's kind of where we're at on the SPY. So let's say 456 breaks out and turns into support. If you see that happen, SPY is going to rally. And what I've just noticed is, I can't believe I didn't even see this, but I just noticed there's actually a gap to fill above on the SPY. There's a gap to fill above at 460, 472. I usually don't miss gaps. For some reason, I was just blinded by the light. I mean, this whole particular trading situation on the swing trade I made, there was a lot of blindness to it. But with that being said, there's a gap to fill at 460, 472, and I'm just not seeing a reason right now for the micro where SPY doesn't fill this gap. So if 456 breaks out and turns into support, SPY's going to ramp up within 2 days to fill this gap at 465. That's what's going to happen if 456, once it breaks out and holds. If it fails to break out and it fails to hold, then we're looking at a micro pullback to 450. Things can become very bearish if 447 to 448 cracks and turns into resistance. But this is kind of where we're at, guys. This is kind of what we really have to see how these daily candlesticks close. So just know, heading in tomorrow, your key level for the SPY and for the market, and what's really going to set the tone, is 456 to 456.60. If it breaks out and turns into support, stocks are going to rally, and SPY is going to quickly start to fill this gap. There's a gap to fill at 464.60. Once that gap fills, and write this down, this is key as well. Once that gap fills, if you see it struggling, if you see it reacting as a resistance, day trade some put options. Get in, get out, lock in your profits, set your max stop towards 467. And in terms of swing trading, towards 3:30 p.m. when the market's about to close, if you see some red candlesticks, if you see on the daily, if you see a bearish candlestick on the daily starting to form, SPY's looking bearish, it's forming a red candle towards this key gap fill level, then that's going to be the confirmation to buy and swing trade puts. So that's what I want you to focus on moving forward. So in terms of micro, SPY is currently testing this key 456 level. If that breaks out and turns into support, the bulls are still in such strong control for the micro, and they're gonna fill this gap. And at this rate, this gap will most likely fill this week. So your key level is 465. That's the next level. Then we're gonna look for some resistance to come in, see if we can get some bearish confirmations. Day trade puts. In terms of swing trade, we gotta wait towards the end of the day. Wait for the bearish candlestick on the daily to come in. If it doesn't come in, you do not buy the puts. So lesson learned on that, guys. And this was all predictable in that sense. I went against the strategy. I made a lot of mistakes, and I really broke the rules, and I traded it very, very poorly and emotional. But guys, don't get attached to one side of the trend. You have to be able to adapt. The market dropped for almost a month straight. And with that being said, if you're killing it on puts consistently, you're really going to fall in love with that euphoria and that routine that you've been doing, that we've been doing to crush it. So you got to recognize and be self-aware on when the trend is changing and to really adapt to it. And in terms of adapting to it, that can be, buying calls or hedging. That can be just sitting on the sidelines and waiting for a phenomenal opportunity, just giving yourself a break because, you've mainly been buying puts, you've mainly been shorting for a month, and you don't want to just dive right back in on the other side. You want to, let things play out a bit, give it some time, right? You don't just want to jump back in and then try to, adapt. Like, there's different ways you can play it, but give yourself some time, and we really got to wait to trade the best steps at the best prices. So in terms of this upcoming trading opportunity I'm talking about, we're going to see if we can get some bearish candles towards 465 for a short-term put. And then I told you the swing trade confirmations that we look for as well. But in terms of, moving forward, 456 is the key level. If it breaks out, turns into support, SPY is so bullish. I'm not seeing any reason on why this gap doesn't fill. SPY consistently pushes for new all-time highs in the long term. It consistently fills the gaps, and I'm just not seeing any reason with the current situation we're in with these earnings runners too on why this gap would not fill with the current momentum we have coming. So in terms of where we could be at, just by judging this candlestick right here, just kind of look at how SPY reacts when it's ramping up and it forms this candle. So like right here, it forms a candle, it ramps up a little bit more, then it gets crushed. Right here, it forms that candle, it ramps up a little bit more, then it gets crushed. I mean, for the most part, I'm thinking 465 is going to be a great opportunity, but we have to wait for the put confirmation towards there. So in the meantime, you could try scalping calls. Just don't try fighting a micro trend. Like, if the market is looking very bullish for the micro and you're day trading, don't try to buy puts unless it's just at such a key level and you see a great confirmation. But like, don't try to fight the micro trend, right? In terms of like macro trading and swing trading, that's a little bit different, but you need a good entry. We got such a poor entry on the previous swing trade with SPY. So I'm trying my best to make up for it. I just got to wait for confirmation. That's what I got to do in order to come back strong. We got to trade the best setups at the best prices, and we got to use the confirmations, because now we saw what happens when you don't use confirmations and when you don't cut your losses quickly and when you get poor entries, right? We've seen what happens. So I just got to patiently wait for the confirmation and for the right price. So that's where I think we're at in terms of the SPY in the overall market. If 456 breaks out and turns into support, it's going to fill the gap, and SPYs and stocks are going to fly with it. So with that being said, let's go over some key stocks. Tesla. So in terms of Tesla, your key level is going to be 1,037. If it breaks out, it's going to push to 980. If it breaks down, you're going to see a pullback to about $900. At some point, Tesla is going to fill this gap below at 845 at some point. It's just right now with the market and the situation, we're looking at a little bit more upside, right? For the SPY to fill the gap at 465, that's kind of the idea right now where that top can potentially be for that macro put opportunity. In terms of BBBY, there's been a clear break of trend. You guys know we've been consistently killing it with put options on BBBY. Every single time it hits this key resistance in the 16s, we ride out the puts towards 15s, towards 16s, towards key resistance. And then it sells off hard, then it sells off hard, then it sells off hard. Well, there's been a clear break of trend and pattern. One thing I was pointing out is, you have these 2 big green days and then it sells off the next day. So today you have the 2 big green days. You had the 2 big green days previously, but there's been a clear break in trend. You're not getting that first red day. It's climbing higher. And if you look at the overall chart right now, here's what is happening in terms of BBBY. So we are beginning to see a squeeze. And if you look at my squeeze indicator right here, when this turns teal blue, this is very, very bullish. I'll show you some examples in terms of like massive run-ups. Look at what happens when BBBY turns teal blue. Right here, it turns teal blue. It turns this teal blue. It ramps up. It gets squeezed. And then when the dark blue comes in, it gets crushed. And watch, I'm going to show you. It consistently does this. Right here, it turns teal blue. Massive squeeze. Right here, it turns teal blue. It starts to squeeze. Right here, it starts to turn teal blue. You see this right before. You guys remember we killed it on calls with this last year. As soon as it starts to turn teal blue, massive squeeze, right? So you see it. And in terms of these past 3 days, it's turning teal blue. So there's a short squeeze indicated on a BBBY, and it likes to fill the gaps. And there's a gap to fill right here, which would be one of the best prices to buy puts on. So keep that number in mind as well, 22.29. And in terms of key resistance, BBBY has key resistance at 16 to like 17. So what I want you to understand is if this breaks out past like 17.10 and holds tomorrow, this is going to continue to rocket. And then in terms of like, well, how high can this realistically rocket for the short term being? With the current volume and current squeeze indicator, we're looking at a run to like 1950 by the end of the week. And then within some time, if the volume comes in, we could see the gap fill at 22.5. So that's what I want you to understand about BBBY. There's been a clear break of trend in pattern, and this just turned major resistance into support. Look at all this major resistance. We're talking about moves from 1630s all the way to 1250s in just a couple days. Well, if it turns that into support, the inverse is going to happen. Instead of it dropping 3 to 4 points within a couple days, it goes up 3 to 4 points. So just keep that in mind. It's either make it or break it for BBBY at this $17 level. We're going to call it $17. If that can break out and turn into support, this is going to really start to rocket and hit $19.50 to $22. So keep those levels in mind, guys. You have to adapt. You have to adjust. You have to express. You have to accept the micro trend. Don't try to fight the micro trend when you're day trading. Right now, and like I've been saying, things are still bullish for the micro, and SPY will most likely hit 465 at this rate. That's just the reality of the situation. It could have a little short-term pullback, but the reality of the situation is stocks hit yearly lows way too quickly. In terms of 2020, that was a much bigger crash, and stocks hit 5-year lows way too quickly. But in this situation, what we're looking at right now is we're looking at a situation where stocks are going to continue to climb higher, and they're very, very oversold for the micro, not for the macro, for the micro. They're very, very oversold. So, when something's oversold for the micro, it's been beaten down to yearly lows so quickly, it's going to ramp up just as fast as it crashed. So just keep that in mind, guys. Be very, very safe. And be more focused in terms of micro on the call side, not on the put side, especially when you're seeing all these clear signs of break in trend, major break in trend. If SPY breaks out and turns 456 into support, that's like a major bullish confirmation that this is going to fill the gap at 465. So just keep all these numbers and price action in mind. Netflix, I tried to call on this today, got out too quickly, cut the loss. This is that gap breakout strategy, guys. In terms of Netflix, like I told you, the gap breakout was at 409. When it breaks out, turns into support, buy the calls. And then you can keep reusing this strategy. So like in terms of yesterday, the new gap breakout level was at 427.70. When you see 427.70, that previous high turn into support right here, you're going to want to buy the calls. And that's what I did. I just cut it too quickly. I was lacking the patience because I was watching SPY, and SPY was all over the place in the morning. It was just like yesterday where it was so choppy at first, had a little pullback, then it ramped up, turned red to green. SPY basically did the same exact thing what it did yesterday, and so did Netflix. But with that being said, you can keep using these gap breakout strategies. So the new gap breakout level is 458. So once it goes above 458, there's no resistance. So it's just going to keep trying to fill the gap if it keeps turning the previous high into support, with this whole gap breakout situation. So keep that in mind. Now, Macy's. Macy's is losing a lot of steam, a lot of volume. I'm starting to lose interest in it. I'm really going to move over to BBBY as my main focus. So this one I'm kind of losing interest in due to the lack of volume and volatility. In terms of Apple stock, if this can break above 175, it's going to be on track for 177.5 this week. In terms of Robinhood, this is going to set up for a phenomenal put opportunity. And just notice and be aware where there's breaks of trends and pattern. Robinhood technically is experiencing a slight break in pattern. It typically doesn't run for more than 2 to 3 days. We are now on the third green day. Like I mentioned, when stocks hit those key oversold levels and when that market hits that key down 10% point, it typically rallies for the micro. That's just typically what happens. And I made a huge mistake with those SPY puts. Again, I'm gonna try my best moving forward to make up for that. I'm definitely gonna come back strong to make up for that. So I'm looking forward to that. Just waiting for the right opportunities, the right confirmations, the right prices. In terms of Robinhood, there's a gap to fill at 1517. If you see this react as resistance at 1517, day trade the puts. If you see a bearish candle in the 15s, swing trade the puts. That fucking simple, man. Don't go chasing this, trying to buy a call. There's a possibility you can go to 17, but don't try chasing this. This was just at 994. Wait to see how this reacts at the gap fill level. This is going to be major coming up tomorrow, so I'm very interested in that. In terms of Coca-Cola, I'm still bearish for the macro. I have a March 18th put on this. The key for the micro is, and guys, keep this in mind, man, for those of you who watch these to the end, you really get rewarded because there's some amazing setups. Coca-Cola, there was a gap to fill today right here, and I pointed this out like 2 days ago, saying, once it hits this key gap fill level, that's going to be the best price to, like day trade puts. So this was the highest gap to fill above at $61.01. You can see what happened when it previously filled its highest gap to fill above. It filled it right here, and then it sold off hard. Well, in terms of Coca-Cola, it's forming resistance. If this is red tomorrow, you're going to want to look to grab a put on that. AMC. So in terms of AMC, we did see a gap close reversal. AMC is repeating history. You can see right here, there was a gap to fill at 1797. As soon as it filled that gap, it sold off and it got crushed. And then 2 days later, it dropped a lot lower. So right now we're experiencing a repeat of that history. It hit the key gap fill level, it sold off. So AMC, for those of you wondering, this is going to fill the gap. This should fill the gap from 1606. If 1606 holds, that's bullish. It's going to try to climb back up into the mid 17s to 18. If it cracks and turns into resistance, then it's going to drop to $15. That's where we're at on AMC. So as of now, this should go back down to fill that gap below. If you see this 16 react as support, it's going to be a short-term buy. If you see it break down and react as a resistance, it's heading to $15. That's the thoughts on AMC. Shopify, let's see. Shopify has a gap to fill right here. This gap will fill at $1,024. That's where it's heading. It's heading to $1,024. That's going to be a key level. If it reacts as a resistance, we'll look to grab a put, as this was previously at 780. But in terms of a lot of puts and in terms of a lot of swing ideas, it is mainly just kind of waiting as well until the SPY hits 465. That's kind of where we're at right now. We still do have to see how SPY reacts at 456, but I'm just not seeing a reason with the current history and strength of the micro for SPY to not go to 465. So CVS, this is turning fairly bearish. This is going to go lower within time. Best price to short is towards 108. NIO stock, let's see. Okay, so NIO stock. NIO stock is going to be on its way to fill this gap. There's a gap to fill at 27.35. So a lot of these stocks are filling their gaps along with the gap on SPY, kind of just following the market. So we'll see how it reacts towards there. There is a gap breakout on NIO. If it can go above 25.98, it's going to rocket to fill this gap right here at 27.35. So keep that number in mind. Quick scalping opportunity could be when NIO breaks out past this level, scalp a call, play for the gap to fill. You see it react as a resistance, then do the puts. SQQ, so the inverse of the market, inverse of SPY. SQQ is extremely bearish. You could see once that blue triggered, man, it was nothing but downhill, and you had the bearish confirmation. This was literally the day where I bought the SPY puts and swing traded them. Literally, like, against my strategy, against everything I do, is just such a stupid fucking mistake, turning a day trade into a swing trade. You know, and I make that mistake sometimes where I enter a day trade very early, and it's typically, you know, if it's extremely early and it's at a key breakdown on a put, then it's typically going to be a very, very bad entry. And I just held it, didn't cut the loss, and decided to hold it overnight to a green bullish candle. Big mistake. But just looking at SQQ, like, all the confirmations were there. Like, we know what happens when these bearish candles form at these major resistance levels. And you know SQQ, whenever it has this massive quick run up, it just drops for new all-time lows, right? So all these obvious confirmations. I'm really disappointed that, you know, I was crushing on the put side, doing very, very well at 470 resistance. And then I literally bought and swing traded puts towards the bottom at like 432, towards the lower end of the channel, 432 on SPY. Really disappointed on that. So like I said, guys, I'm going to try my best to make up for that, because I typically do not do that. I made a serious mistake in terms of that swing trade, and I'm going to make up for it. In terms of SQQ, this is headed to fill the gap below. It's as simple as that. It's headed to fill the gap below at 33.5. Once that happens, we could see a little reversal. As of now, this is still very bearish. It just turned previous support into resistance with the top wick. But in terms of an obvious confirmation to buy puts and short the SQQ and then buy calls on SPY was right here. Major resistance. You have a retest of that major resistance, but it's a lower high. And then you have the blue confirmation on the squeeze indicator, right? And just by looking at the overall history of SQQ, it typically doubles and then it just gets crushed, and it bombed out at 28.15. It hit almost $50. Like, that's just, you know what I mean? That's it. And that's kind of where we're at. Like, you can see right here, it forms the bearish candlestick, and then the blue comes in on the squeeze, and then it just gets crushed. Like, it was just so obvious. I'm just really disappointed that I screwed up on such an easy looking swing trade. But there's a lot to learn from this, guys. There's a lot to learn from the lessons and the mistakes that were made within this previous trade. I really hope you learned a lot from this, because I'm telling you, there's a great learning curve. There's a great experience from this. Don't have much of an opinion on AA at the moment. Something I'm keeping an eye on. PayPal had a massive gap down. So the deal with PayPal is when it gaps down after earnings, it'll go back up a little bit for the micro, but don't buy anything with PayPal. Like, fuck it. Don't do anything with it. For this one, in terms of where it's really heading for like the more midterm, it's going lower before higher. So I think it's going to go back down to fill this gap towards 128 to 127 within the next 30 days. For the short term, we could see some consolidation, some little spikes. Overall, just stay away from this one for now. It's heading lower for the macro. Just know that. It's definitely going to like 120s within a month, in my opinion. In terms of Google hit 3,000. Let's see. So don't chase this. Don't chase this. This is gonna be one of those situations where I'm thinking something like this. You know, just has this massive move up on earnings, and then we start to see some resistance kick in within a few days. Then we get that confirmation to buy puts on the market. So yeah, in terms of Google, don't do anything with this. We'll see how it reacts towards 3019, towards those all-time highs. We'll see. It's currently on track for a new all-time high. Yeah, it's 3009, so it's 10 points away. So we'll see how it reacts towards those all-time highs. I really don't like buying new all-time high breakouts. But yeah, that's kind of where we're at. So guys, I think this was a phenomenal video lesson. I think there's going to be a lot of great opportunities coming up. I think the price action analysis on this was very, very on point. I think this was a great lesson. So with that being said, I will see you guys tomorrow live at market open. Please use this to your advantage, right? Use this to your advantage within your micro trades, your short-term day trades, within your swing trades, right? Use this to your advantage. It will help you understand who's in control, whether it's bulls or bears, and the key levels to look for and what to expect moving forward. But yeah, for those of you within Trader Society, I will see you once again live at market open for the live trading session. For those of you who want to be a part of Trader Society, it is the first link down below in the description. Just to give you some info on terms of what's included, there's a live trading session every single day at market open where you get to trade live with us. There's exclusive access to a chat room where you can direct message me one-on-one. You can also ask me questions live on spot within the live trading session every single day at market open. So say I wasn't able to get back to your Discord message within time, or you've been waiting on a reply, you can ask live on the spot every single day live at market open as well. You can also contact me within the chat room, right? And then you get access to the video lesson library that teaches the price action technical trading strategies, that teaches psychology and risk management. So there's a lot more to it. If you want to check it out, it's the first link down below in the description, and you get instant access to it. It's a one-time fee and it's lifetime access. So yeah, I'm looking forward to trading with you guys. I'm looking forward to working with you guys. I will see you tomorrow at market open, guys. Let's crush it and let's patiently wait for those best opportunities to come around. It's time for the get back, guys. We got to patiently wait for the get back. I'm looking forward to it because I see some great opportunities coming up, and I will see you guys tomorrow live at market open.